Hey, this is Kevin Van Trump. We got Mike Mock on the call. We got Andy here, our typical a good crew that we go way back. So, gentlemen, appreciate being here. Mike's with CGB, does a little of his own consulting. Andy obviously started Daniel's Trading and, avid trader. So, Mike, how things been?
Really good. This is the best time of year in this part of the world in terms of weather. The farmers are excited. Last year we were the epicenter of all the prevent plant. So I can't emphasize how much a difference we've got in the attitude in this part of the world. The crops are out there. Some of the folks that don't have the best looking crops, but we got everything planted. The resurgence in prices is a big deal, Kevin. I was at a board meeting recently with a local equipment company, and they're seeing the farmer, after everything on hold for a couple of years here, back engaged. So certainly things are in a much more positive light. People are upbeat, even if their personal crops aren't ideal, because we do have some drought issues up, spotted around the area. But in total, the attitude is 180 degrees better than what it was 12 months ago.
And we heard this morning you got the Big Ten playing football again.
Well, that's, I don't know how you put a price on that. I mean, there were some people pretty upset. This whole Ohio-Michigan thing is ongoing, and you can see it even through COVID. And there was a lot of talk that the two universities to the north were against playing, and that's created a lot of local talk. So I'm excited about it. I've been to 3 high school games already. I just can't imagine that you'd have the high schools playing, Cincinnati playing, and you don't have Ohio State playing. So I'm tickled to death that they're going to get back to action here.
Down here in high school ball, I was telling some other guys, now they're only allowing one parent. You get 1 ticket per kid. It was 2. And then, you could have both parents. Now it's down to 1 ticket a kid. I don't know. We've had pretty big, I guess, outbreaks the last few weeks or months, but I don't know. But, yeah, it seems nuts. Yeah, that's what they're down to. That wouldn't be a lot of fun if you were a senior or junior, Nobody in the stands, so. What are they doing there, Andy? Anything?
Well, I mean, the team out here, the high school team out here, was formerly the Redskins, and due to political persuasion, they've changed their name to the Timberwolves. But and there's a lot of animosity towards that whole process, as you might imagine. But yeah, no, they're back at it, and stands are full. They're not as COVID freaky as a lot of places are. We haven't had as much activity in that regard out here, but they're going hard, and rodeos were going all season long, and so we didn't see as much of the COVID effect out here as you might have in other parts of the country, and that was kind of refreshing. I mean, you still wear masks when you go into certain stores, but overall, it hasn't really been as disruptive as it has in many parts of the country, at least.
Yeah, that's one thing I wanted to touch on. We've had some questions about FARMCON, and I'm just kind of waiting on Kansas City and the hotels. They're telling us may have to push it back. I know Jordan said they weren't bringing concerts back until, I think he said May. Mm-hmm. So I don't think they're going to allow concerts back in Kansas City or some of that other stuff right now till May or something. So, and I know the mayor or whatever has some big thing in place until the end of the year and then to reevaluate. So we're just kind of playing it by ear right now on any of these bigger, I think same way with most of the bigger conferences. Mike, even not to speak any, or Andy, I think they've
very limited local stuff and small groups.
Yeah, everything's kind of been canceled. So,
So you're waiting to call the ball on that, huh? And now you do it virtually if you can't do it in person?
Well, I don't think I'm going to.
No.
That's why I thought we'd just do some calls like this with random people that are usually there and on the stage, and just kind of keep the ball kind of at least in the air and rolling a little bit, and I guess see what the hell happens when we get there. I missed my first deadline for kind of having this discussion with them, so they hit me with $30,000, and then they tried to hit me with a $300,000. They tried to say, no, you're either doing it or it's $300,000. And I finally got a lawyer from the letter from the city to be like, listen, they tried to say this wasn't an act of God. And I said, shit, I don't have anything to do with this. The city, I'm not. Yeah, that's what the main hotel was trying to say. And then all of a sudden they backed off that. And so, yeah, it was going to be a kind of a serious problem. I was like, damn, I guess it'd just be me and a few friends sitting there partying away $300,000 or something worth of alcohol and food. I don't know. So I was like, this is nuts. So anyway, it was the new Lowe's. Lowe's had just opened a brand new hotel. It's supposed to be the nicest hotel in Kansas City. And we had signed a contract with them for that date. And I was just like, and if you get closer to your date, you lose more and more of your deposit.
Sure.
Well, I had moved past my supposed date that, locks you in or doesn't lock you in. So anyway.
Well, you're going to have to call the ball pretty quick if you're,
I'm with you. I agree. I mean, I guess I'm going to wait till after the election, just see if half the town's still around, or what happens if we burn down half the city. I'm not really sure. I don't know how it's going to go. So what are you guys thinking? What are we hearing on election? Mike, you're in a hot seat, Ohio.
Yeah. It's going to be interesting over here. Obviously, I think that, and this is to be expected, things are tightening up. The economy is certainly improving. It's amazing to me that without any additional fiscal stimulus, obviously that's games being played between the two sides there, that the equity market continues to march on. The economy is kind of improving on its own. I don't think there's any question that folks, we've got friends that work at restaurants and bars that we try to support, but many of them, still struggling. And it'll be interesting to see how things evolve. But my sense is, because the economy is improving, if we get closer and closer to a vaccine, and people just feel better about 2021 versus 2020, this thing could really tighten up here. And Mr. Biden, I think, has lost quite a bit of his advantage.
Yeah. Andy? Yeah.
Yeah, I mean, I'm somewhat biased in my opinion, but we have debates to go. We have we have the Durham report to go. We have. I just don't see. I think the silent majority is out there. I think they're. I don't know. I think Trump's going to win, unless, of course, there is manipulation at the ballot box or in the post office, and I think there's going to be. I don't think there's a snowball's chance in hell we have a decisive results by November 4th, and I'm concerned that this thing gets pushed out. That these fleet of lawyers that are out there, they're going to contest every single election, every single vote. And it's going to make the Chad counting in Florida back in 2000 child's play in comparison. So, I think this is going to be a real shitstorm, frankly. And at the end of the day, it could come down to, a Supreme Court decision. We could have Nancy Pelosi as the interim president. All sorts of really fun things could happen with this deal. And, I think that it's impossible to make economic investment decisions with the black swans circling as close to the ground as they are. I certainly think there's the hype, the media, the BLM, all the noise and rhetoric that's out there, and the tandem perspective of the Dems and the mainstream media is really a concerning event that is occurring here. And but I still think that the silent majority out there wouldn't want to go down the Green Deal and the socialist road. I don't think this country's ready for it yet, and I think that at the end of the day, as little as a lot of people are talking and as quiet as people want to be about their political beliefs, I think they'll do the right thing in the ballot box, and I think Trump will be reelected.
Yeah. One thing that's interesting, Kevin, just driving around, and I'm not talking about just out in the country, but driving through the city, the battle of the signage is all in favor of the president. You just don't see. There's no question that his base is much more engaged. than what the Biden base is. I think the folks that are, stridently for the vice president are the anti-Trumpsters. They're not pro-Biden. And I think that gets into that, Andy's talking about what do the folks in the middle do, and I think that's going to be interesting to see how that plays out.
I remember about 6 months ago, Andy, when I said to you, well, it was more than that, maybe a year ago, I wasn't sure Trump would re-win the presidential election. I felt like that as we went around, and I was one that said, 4 years ago that I thought he was going to win, because when we went around the Midwest, all through the country, you could feel the buzz. But then you started to feel a buzz that, people were maybe going to come out and vote against him just for some odd reason or whatever reason they had, not odd reason, but a lot of people had a lot of reasons. And I didn't feel like he had gained a lot of new voters from the left. I had kept with that argument that you had some of the boomers die that had voted for him, and you added in people that may not vote for the president. And I didn't know if he moved anyone that had. I certainly don't feel like he moved a lot of people that voted for Hillary over to vote for him. So I thought you may have had some people not come out and vote, and maybe by chance, this was before Biden was the nominee, that the president would have a tough time. But then when Black Lives Matter started, and you started burning down the cities, and you went with this whole defund the police thing, I think people are going to come out and vote against that. I mean, I think they're really going to come out and vote against that. No one wants to see that shit. Nobody wants to see the towns and cities burnt down, and the things that are happening. 2 police officers get shot in the head like we saw this week. I mean, just crazy shit. So, I think it's sad. I think it's definitely sad what happened when people are innocently killed by the police. But at the same time, I think people do want safety, and people want to believe that they're safe in the streets to some degree. So I think you've seen just a massive shift in sentiment. And, hell, everyone talked about the Chiefs game where they were booing that, the 1 or 2 minutes of equality or whatever the heck happened at the beginning. There were a lot of my friends there that they said, yeah, it was straight booing. And I just think people are wanting, I think they're wanting to be somewhat safe. They're uncertain about how that all plays out. And I think they see, like Trump was saying, they're not really peaceful protesting in a lot of these areas. It's become a little bit more than that. So, and I sit there and debate. I think the wealth gap is probably of most importance than anything. How the rich are continuing to get even richer, and we're creating this bigger and bigger divide. I know a lot of people talk, or Michelle talked to farmers on the phone all the time, getting their credit cards for renewals or this and that. And almost every one of them talked to her about some type of civil war or civil unrest, or, all this crazy is going to break out. And I don't think it's necessarily going to be black against white. I just don't see that. I don't see it as a race thing. I see it as more haves against have-nots. Would you agree with that, Andy?
I sure would, and that's probably the most concerning thing. This whole the escalation of this wealth gap divide that COVID is really, and we haven't even seen the episode, the epiphany of all that yet. It's going to be many years, but that graph is really going in diverging directions, and I'm very concerned about the wealth gap. I think that probably is ultimately the biggest issue we face, and it's going to lead to a lot of dissension. And I agree, Kevin. Look, I don't see the whole race issue. I think it's an excuse. I think it's touted and talked about, but frankly, from the days of Jim Crow to where we are today, I just don't see it. And maybe it's just because I don't believe in my heart that to be an issue, and maybe. I don't know what it's like to walk in someone else's skin, but I don't feel it. I don't sense it with people I know and talk to. And so I think that's kind of, an excuse or a symbolism of what you're saying, the wealth gap. And I think in the end of the day, that's probably one of the biggest challenges we're going to face. And I don't have a good answer for it. I certainly don't think it's a Republican or a Democrat thing. I think it's well, when you have over 50% of the country the takers exceed the makers, then you get to a point where, the republic ends. And I certainly hope that not to be the case, but, we're at that inflection point. And this is really expanding and accelerating that wealth gap. And I'm concerned about it very much. How about you, Mike?
Well, I think so. And, I thought we all think about it when you get to be our age, but, I've been extremely disappointed in our public school systems. And I've been monitoring things like progress with charter schools and what kind of success we have. We've got to get the broader populace better educated with better opportunities. And there are no easy answers there, but it's I suppose it's easy to point fingers at teachers unions, and I certainly do from time to time. People have to put those kinds of thought processes behind them and say, look, what are we going to do to get all of these kids, wherever they're located, whatever state, whatever city, a better education? And I think that would be an investment that I think would pay big dividends. And there are people that you're starting to see, the Bill Gateses of the world, those kinds of folks starting to spend money in that arena, because I think that's where we've really got to devote a lot of our attention moving forward. We got to raise better, smarter, more equipped kids as this world changes so quickly.
Yeah, I was on a call the other day, and you guys, I thought about it a lot, because the whole conversation was around the wealth gap and a path out of poverty. And there really isn't a clear path out of poverty, except, like Mike says, through education. But, if you look back to all what I call economic revolutions, let's say steel, Andy, you and I like to look at history of businesses, steel, oil, we could go to the automobile, and you go into other things. Those industrial type or economic revolutions brought along a ton of the labor force with us. I mean, our population was much smaller, but a lot bigger chunk of our population was pulled into that wealth through factories and labor. Well, shit, now two guys or three guys and a couple of badass servers can sit in their basement and create millions and millions in revenue and economic activity. So everything's just moving faster and faster. So you're not pulling that big section forward in any type of labor capacity. And I told the people on the call, I said, it was like when we all played Little League football. Shit, when we all played Little League football, we could all kind of compete, and then we lost half of those kids when we got to junior high. You lost another half in high school. And time you're in college and the pros, the game's moving so fast, you're only left with those that are the most well-equipped, that can handle the speed. And I sit here and I'm like, you really are only left now in today's world. Fewer and fewer people are that smart and that equipped to run some of these new businesses and this new technology and these new things. So I sit here and say, I'm not even sure the road to education is the path, because I don't know if they're going to compete with the like Andy's son going to Wharton and people that are getting their PhDs and things like that. It's still tough for them because so many other people now have college degrees. So, that road out of poverty is tricky as technology comes on faster and faster and doesn't bring labor with it. That's my worrisome part, because I sit there and these people wanted to throw numbers around from the 1970s and 80s on what the median income was, household income of our middle class. Well, yeah, but hell, all of our parents and most of the people where I grew up, they all did manual labor, and they made a pretty fair wage, and there were a lot of opportunities and a lot of jobs. Now that, that's gone to the wayside. If people don't want to work super hard and they don't want to go to school for a really long time, well, shit, I don't know what the answer is. And
the service economy is getting crushed with COVID, obviously.
Yeah, I agree.
And these are all the non-educational type jobs that were eventually going to get replaced with automation and AI. But the rocket shot is transforming that as we talk. And I'm concerned as well that what are we going to do with the uneducated portion of society that doesn't have the skill set to adapt to, the new AI world. It's going to be a problem.
It's scary, yeah. What do we think with interest rates? Anybody got any opinions? stay low for longer?
Powell's told us, hasn't he?
Yeah. They've been about as open about that as they can possibly be, pretty transparent, not even thinking about it, so there's some implications with that, Kevin, that you and Andy would have better opinions than myself, but I don't see any change in that in the foreseeable future.
And you still see, I mean, you're big, Andy, on the national debt and things of that nature, aren't you? You're somewhat concerned, or?
Well, I mean, I think we've already gone, I don't think we can come back from this abyss. We at some point we have to inflate our way out of it. Hence, I really am becoming more and more of a gold and precious metal bug, because it was one thing when we had $20 trillion, but when you take a third of our, you all halved it again with COVID, and this price tag's going to be closer to 10 trillion when it's all said and done, and I don't see that we can ever pay that back in any realistic way, and to think that our kids are going to pay this back someday, there's no more anticipation that what we can just through tightening our belt we're going to pay this back. It's never going to get paid back, and someday we're going to have a debt jubilee, and that day isn't too far away. Japan, for instance, they once you've monetized over half the debt, as the Japanese government already owns over half their debt, you kind of control the destiny. And at some point, like in the early 1800s, when England had a debt jubilee and they forgave everything and did a restart, somewhere along the line, on a global basis, we're going to all get together and it's going to happen. But how we get there, and paper inflation is probably the worst thing from the Weimar Republic on down to Zimbabwe. We're certainly not there yet, but I don't know how we get away from it. It's inevitable at the end of the day. No one's ever, we don't have the fortitude to try to pay this back.
It's interesting if you think about it. I was on a call with I don't know, some Goldman guys and a couple of, but they were talking the amount of our serviceable debt. It really hasn't changed any from the 70s, 80s, 90s, 2000. We had a lot lower national debt in the 1980s, but the serviceable portion, you're paying 16, 17% interest. And you forward that to the 90s or 2000s, I mean, you were paying 8, 9% interest. So the actual serviceable debt due each month or however they figure that out, it really hasn't changed any. They showed me, they threw a graph up, and it's pretty interesting though, because everyone wants to talk about the debt, but when you start to think, I guess, about the serviceable portion and what they're having to pay, I mean, it really probably at zero interest rates, hell, I guess it may be not much different than before. So I don't know, definitely interesting. But yeah, I'm with you. They said yesterday, 2023 possibly, maybe, before they even look to raise rates much or even make it.
Yeah, but how can you raise interest rates with the kind of debt we have? I mean, it's one thing to service zero interest. It's another thing to service, as you said, 16, 18% interest.
Yeah. No, I agree. So you guys have any other favorite investments or stocks or trades you've been doing, or and we'll talk about the grains? Or
it'll be interesting to see. A lot of people have talked about when do we see a rotation into the cyclicals. You take a look at some of the some of that's occurred now, but the banks are certainly lagging. Energies are really struggling. I mean, Kevin, it wasn't all that long ago Exxon was the biggest company on the planet. Now what are they? I don't know, $36, $37. What's its future in here? Difficult to see. So it is interesting. And do we continue to trade in this narrow focus with just a handful of tech-related stocks that elevate the whole scenario? And at some point in time, this attitude with the Fed, to me, it's almost without question. We're going to, it's where else can we go with our money? So we load up on the equity market. You create an asset bubble that at some point in time will burst. That has me nervous too. So, I think you had to be involved in equities, but you got to be perhaps a little more diversified than what some folks would suggest today, and be a little careful.
Andy?
Well, I mean, Kevin, we were kind of both like mules with our heels dug into the ground when we started bouncing back after the, in March and April and May after the big downturn. Fortunately, I know you got to the sidelines and actually re-engaged. I at least had the common sense to get to the sidelines, but I haven't necessarily re-engaged. I've done some spot trading here and there, buying some marquee names, but I'm not going to fight City Hall. I do believe that the election outcome is going to have a big influence on price direction, and I think that if Biden were to win and they take the Senate and take the House, I think we'd see quite a downturn in the market. And conversely, if Trump wins and splits the House and the Senate, we can march another 10-15% higher. But I think those are going to be pivotal points in the direction of things. And I agree with Mike. We got some bubbles. We got PE ratios we've never seen before, and they're all tied and tethered to a few high performing tech stocks that at these PE ratios, it's hard to bite the bullet and jump on board. But with no bond market, where the hell else are you going to go with your money?
Yeah. I think, like Zoom. Zoom and Tesla bailed me out. That's
you've done great with those, man.
For certain. I mean, but otherwise, other than that, I'm maybe a 12-15% in my regular stock. One of my bigger holdings, like Mike's saying, is Goldman Sachs. I bought Goldman when they came out and did the deal with Apple to be the Apple Card and Apple Finance, and I just went with that play. And one of my other bigger positions has been PayPal, and that's been good. And I'll give you a funny one. I bought I got Todd driving down to Oklahoma today, Daddy, to pick up an Airstream. So I buy a 36-foot Airstream down in Oklahoma from some guy. I don't even know what the hell I'm going to do with it. Might rent it out, might put it on one of the pieces of land out here. I'm not even sure. So we buy that antique mall, down in Harrison.
Yeah.
So I sent Todd down to Oklahoma today to pick up this Airstream. I'm not shitting you now. And I went, had Shogo, got a bunch of cash, the guy, and I give it to Todd, and I said, be careful, don't get held up or anything at the damn gas station or anything. And I called this guy on the phone last night, and I said, hey, I'm sending him down with a semi-truck driver, with a low boy to put this thing on and all this shit, and a bag full of cash. And he's like, oh, hey, is there any way you could just send me some over PayPal? And I had sent him a couple of $1,000 deposit just through PayPal, Venmo and stuff. And I said, huh? And he's like, yeah, cash has just become kind of a pain in the ass. And he's not that old. And I said, excuse me? And he's like, yeah, because then I got to go get a cashier and I got to scan it because the bank I use don't have any physical locations. He's like, it'd just be a lot easier if you use PayPal or Venmo. So, PayPal owns Venmo. And I'm like, I told Todd, I said, hey, bring the cash back home. I said, the guy wants me to just electronically pay him over the thing. And I told him, I said, okay, I'm buying every break in this damn thing in PayPal or because I think that's just where it's going to go. I mean,
yeah,
like Mike's saying, it's crazy that these kids, I've had some of Jordan's friends come out and help me at work. And I was going to pay him cash. I see him hawing around like not to know. They kind of don't know what to do with cash. I said, do you just need me to Venmo you or pay? Oh, yeah, that'd be a lot better, a lot easier. It's nuts to me. I can't believe it.
I mean, the government doesn't want us to have cash anymore. They'd rather everything be electronic.
Yeah.
A lot easier to tax and trade.
Mm-hmm.
Right. So it's like, those to me seem like they could be big trends or big plays. So I don't know, but it's interesting because if you I talked to a few bigger, just straight hedge fund guys that trade nothing but equities. And they're like, it's become so nuts from when we traded, say, in the 90s, 2000, early 80s. You just got a shitload more money chasing a whole lot of fewer stocks.
Yeah.
And if you really want to get down and look at it, that's really what it is.
Yep.
Think of all the people now that can trade off this, just sitting around at a restaurant and all these Robin Hood kids and all these other. So now you got all kinds of people, and globally too. You know, globally, a lot more people trading American stocks, and a whole lot of fewer listed stocks on the exchange. So, shit. I mean, I don't see this trend changing any. I just watched Snowflake open on the board.
Yeah, isn't that crazy?
50.
God.
Talking 75. Buffett and what's his name from Salesforce buy it at 75 to 85, and this thing opens at 250. It's like, it's just silly. So I don't know. I'm with you guys. I don't know. I mean, I think you got to be in the ones that are moving, you know.
It's amazing how these IPOs and how quickly they can get to this global scope. You know, they just, you know.
That's what I'm saying, with just a few people on staff even. I mean, hell, they're trading at valuations like Ford and GM have never even seen, and they got 200 people working for them. It's nuts. So, yeah.
Well, you know, I got in this pre-IPO on Palantir, which is, you know, touted by some on the Wall Street to be going to be one of the darlings of this year, maybe the decade. That's going to be coming out here in the next, I'm told, in the next couple of weeks.
Yeah, that'll be nuts. You know, we were getting things yesterday, both Michelle and I, from Uber and Airbnb to register to vote. I was getting emails.
I saw that from Uber yesterday. I go, what the hell?
Through their app or through the company. And I'm like, wow, that's interesting. I don't know. I mean, that seems a little nuts, but who knows? So, yeah, everything's just definitely shifting and changing.
So you can't fight City Hall. I mean, the trend's there. And as you guys both said, where else are you going with your money? You can't put it in your, can't put it under your mattress anymore.
No. You see anything?
Under your mattress, maybe.
You see anything with land prices, Mike, or anything changing out there on your end? Or
well, you know, it's they've certainly steadied here. I mean, there were some pockets where stuff got a little bit cheap, but I think people are feeling better about things. I think and it's not just farmer interest, although that's the focus. We're seeing some investment interest, and this goes back to the low rates. I mean, there's some folks that I know that have approached me to try to get me in touch with some farmers and said, look, if I can get a 3.5%, 4.5% return and not have all my money in the equity market, something stable like that, set me up with the right guy. So there's some interest there, and I think this whole tone in ag is changing. You know, relative to that, people are more interested. You know, Deere's done very well. Mosaic's starting to rock a little bit. I mean, I think some money may move into this sector as part of some of this potential rotation. How deep, how big, how influential, I don't know, but it just feels so much better than what it did. Heck, even July 1st, Kevin. I mean, a lot's changed.
Andy, same with you out there. Real estate wise, everything hot?
Oh, it sure is. You know, we were usually, when you get to the fall after you know, Labor Day, between then and the winter when ski season starts, it used to be called the slack time. Hell, Chip and I were driving around looking at some old silver mine that my great grandfather won in a poker game back in the 20s, and was offered $1 million for it in 1933 and turned it down. Wow. 1933. And said, well, if they're willing to pay that, they're willing to pay more. And the mine never did open after that. It closed down. But anyway, we drove, and we had to drive through 3 towns before we could find a motel that had a room. You know, all the resort areas are packed. Land is flying off the shelves. You know, the local airport here has a problem with all the jet traffic because, you know, everyone's looking to get a place away from it all. And so, yeah, I mean, real estate's absolutely on fire out here. You really, I mean, lots are trading at levels that they never traded at. Hell, I was talking to Dave Duncan. He said that new construction up in Big Sky is going for $1,100 a square foot. $1,100 a square foot.
These lumber prices are crazy.
Oh, well, yeah.
And I think people just keep paying higher and higher because, like Mike says, the rates are so low. You have 15-year mortgages out there like 2.65. You got 30-year at like 3. So, you know, it's just able to afford more and more. And we keep seeing sale prices driven higher and higher around here. It's crazy to me. So,
where else are you going to go? I mean, if you ever get paper inflation, you better have physical assets.
Yeah, that's true. You buying any land or anything like that? Or?
Yeah, there's a golf course over down the road that back in '07 when they started to come on stream, they were selling these lots for 300 grand. And for whatever reason, and it's kind of a cool little area. It's not 10 miles away from me. You can buy these lots now. It has sewer, water, and roads for 40 grand a lot. And so I'm buying a package of those because I just don't see the downside. I mean, they were that in 2011 you could buy it for 40, and today you can still buy it for 40. And there's no other place to go. It's beautiful settings, and so, and I don't think I'll get hurt. Might not make anything, but what the hell?
Famous last words.
Yeah.
Who knows? Maybe, right? So what do we think, Mike? Corn. What are we saying here? Corn market.
Well, I think there's a difference, but I've kind of flipped my tune here from where I would have been, 4, 5, 6 weeks ago, which would have been, I was patient for a long, long time with beans, Kevin, and did some early selling in corn, many, many, many months ago, and then wondering where we're going to be. But the composition in corn, as opposed to beans, is completely different. There's room for them to buy. I think a lot of good people are starting to plug in 20 million metric tons for China. There's some people talking more. So, I think we'll get chances to sell corn, at these levels or higher for some period of time. So I think we can be, and again, I've got the luxury of having some stuff on the books at higher prices from earlier. So I do want to be a little patient there. The only concern I have, because we got big export numbers plugged in, not just for corn, but for beans. We got a huge fall program in beans. The limiting factor, I think, is going to be fobbing capacity. A lot of folks want to toss out corn export numbers north of 2.5, and I'm having trouble making that pencil, given our limitations. I mean, you're going to use ADM opened Galveston. You're going to use Milwaukee, Toledo, in addition to the PNW and the Gulf. Well, it'll be interesting to see how that plays out. But, to see corn, with good support, 350, 360, and a run to something higher, how much higher we'll see when we get the final crop size, what South America do. But I am worried, and I'm kind of jumping to beans. The funds are really loaded here. And anytime that they're approaching along a 200,000 contracts, they're along a slug full of oil and meal too. So I've got my guys stepping up in here, either side of $10 and doing some things, mostly option related, Kevin. But I think where we've been waiting and waiting and waiting, and we're starting to hit this bean market pretty hard. It's just, you're the one that's famous for taking chips off the table. That's what I'm doing here the last couple of days, is taking the chips off the table in the bean market and being a little more patient in corn.
Yeah. Andy, what are you doing? You long beans still, or trading in corn?
No, I sure bought them right south of $9, and I didn't write it out as long as I should have. I wish I had. I certainly see the rearview mirror is always crystal clear, unlike the windshield. But yeah, I agree with Mike. The funds have kind of gotten themselves loaded up. Obviously, the biggest buyer in the world's China, and they're buying out of necessity, not necessarily to be honorable and meet their commitments, but out of the lack of available supplies elsewhere. I think you can maybe run a little more in corn and beans. I wouldn't want to be short with stolen money right here, but from a spec perspective anyway. But I don't, we don't, if you have a weather story down in South America, I think, things could get interesting. We used to need to have 200 million bushels to contemplate carry out in this country to contemplate, north of $10 values. But here we are with 450 plus. And that can go down for sure. It's all a matter of China, but I get a little concerned about the fund length right now, and I don't want to be chasing it. I think I'd rather be a seller on a 50-cent rally than a buyer here. In the case of corn, I think there's upside. I think China could legitimately need to buy a hell of a lot of corn. With what's gone on with their reserves and the drawdown and the prices being paid, and their need to curb inflation and et cetera, and typhoons flattening a good portion of their crop, part of their crop this year, and really we don't have a big fund position in corn right now. So I guess I'd rather be long corn, be cautious about beans, and think that we could maybe get a little bit of a move up to the 370, 380 area. I don't see us getting back to $4 anytime soon, but I'd rather be long than short in the corn, and I'd rather be neutral looking to sell rallies and beans.
Yeah. Kevin, I think there's an interesting, like, Andy and I are old friends, but there's a difference in perspective. And I would take Andy's point. If I was a speculator, not involved in, I'm working with farmers every day. I think that I would approach the next year or two, given all the macro stuff we've talked about. If I want to be a speculator, I'm going to tend to want to play it from the long side, which is not where we've been, obviously, for the last few years. There's a change there, and that's China, and it's the weather issues and so forth. But, I sit in a different chair and have to make sure that my guys are, taking chips off the table, so to speak. And I think it's always important to discuss that difference in perspective. The spec probably wants to play commodities from the long side. He's expecting weaker currencies. Andy's talking about gold and so forth. Those things are supportive to commodities. All I'm telling my farmers is hey, when you get a great opportunity, and we're $1.30 or $1.35 higher than we were, in a month, and we're making good money. And then some of the folks, particularly south of I-70, are looking at their best bean yields ever. Hard to not take some of that home. So we always have to talk about, what's Kevin or Andy's perspective versus someone like myself or someone else that's helping farmers. The farmer who, and I knew a guy, this goes back to, I hate to pester you with the story, but this goes back to 1988. I was talking to a guy that felt he knew when beans were going to hit their highs. And I think we traded 10.22 in June, and he sold beans at 10.15. And I tried to encourage him to sell some prior to that, and he didn't want any part of it. So, when we got to 10, 15, 20, he said, Mike, I told you we'd get here. Well, sure enough, all hell breaks loose. The market collapses. We talk, a month or two later, he sold 3,000 bushels within 7 cents of the high. He never got the volume covered, and then he becomes, I got to hang on to him, and it would turn into a complete disaster. So a lot of what I do, and Kevin, you get involved in this too, is the psychology of making sure that the producer, even though the environment is friendly to him, that he takes those chips off the table. And I think that's where we're at with beans here. The fun length is just saying, hey, there's some risk here, and we got to take care of it. Let's get some coverage in place. And there's some wonderful ways to do it. I was looking at some structured products, the floor ceiling stuff. You can set, 990 floors with 1050 ceilings for minimal cost, and see what the next month brings you. I love those kinds of transactions in here, Kevin.
How much new crop you getting sold, Mike?
Well, the farmers hit it here. We got to a point. I don't think it took a lot to encourage them. The phones have been ringing and so forth. So I'm not uncomfortable at all with 50%. The other thing, Kevin, is what if and you know how this goes. Some farmers want to keep beans longer. We shouldn't be keeping physical beans at home. The Chinese program is all loaded up here fourth quarter. Maybe it lags into January. We should physically move those beans. So some of the things we talked about with guys, and we can get into the spreads a little bit. The weather looks good. The farmers are starting to get a sense of how many beans they got. You write a basis contract, but you roll it immediately to the March. So if it's 10 over the Nove at your spot on the river, now it becomes 5 over the March, and then you protect it, with some sort of structured product out there. Another angle, it's basically doing the same thing, is hedge the beans flat price and go out and buy a call spread in the spring and say, I'll bet the South American weather that way. But as long as a guy's doing some minimum price like that, I don't have any problem with him going even 60 or 70%, especially if he's got the yield. If I can lock in lots of money, I got to be disciplined enough to do that. My banker's going to want to see me behave that way, especially after the way things have gone these last 3 or 4 years. So to me, that's the action I'm taking, is more in beans today.
Mike, what about red Nove? Are you doing anything out there?
Yeah, it's a really good question, Andy. And again, given the background that you guys have laid here, that the commodity market's a little, bullish, and, we've done a little bit. I mean, 960, 65 or so is a decent price. It's not a great price. It's a long way off. We got South America to deal with. But I've got a few guys, particularly Andy, that are going to plant more wheat, and it's a wheat being double crop. That's not a bad price to get started on, but generally limited to something like 10%. You and I've got an old friend in the Delta, Jerry, and we've talked about this quite a bit. And, you know, we want to see how South America rolls before we hit that too hard. But I do like the idea of staggering sales, getting some 2020 in place and nibbling at 2021. I don't want the farmer to lose his selling energy. I want to keep him engaged. And one way to do that is to talk to him about a little bit out there in the 2021, especially the guys in the Mid-South.
Well, one thing I've heard you say, and Kevin, you're a big believer in this, if you don't have something on to trade against, then you're kind of, where do you begin? You got to get your toe in the water somewhere along the way. And if you can do that at something in the north of positive in terms of your margins, you got to have something there to at least have perspective with and keep your attention.
Yep. You know, that's a really good point, Andy. When we last visited, I think we discussed the fact I'd had a few beans, just a few, that were sold this past winter at about 960 in the Nove 20. And, you know, it wasn't a lot, but it got something on. Then the market breaks. We're talking beans are sub $9, wherever they're short. Some guys sold puts against those hedges to dress them up. That was the whole point, having those on. And all of a sudden you pick up 20, 30 cents to add on to your hedge. So I agree with you. Any of those kind of things help keep you engaged. The guy that just stops selling, just quits cold, he'll never get re-engaged again. It's just, you just can't let a farmer get into that position.
Yeah, I'm going to, do you like it? I'm probably the opposite of you. I'm long beans. I mean, I'm holding long bean positions, and my theory is, and someone made the comment the other day, I wrote in my wire, I said, hell, if you held a gun to my head, I think we'll see 1050 before 950. And I'm just going to keep adding to them. I'm adding to them on the rallies. I'm not selling shit on the rallies, and I'm going to try and hit a home run. So I just am a believer, and I believe this way with producers too. I mean, we're about 50% sold. We got a floor right here under on a little bit more, but I've got zero cap on the upside for the remaining 50%. I think you don't have that many opportunities in your lifetime to hit home runs. And I think you have to pile into them is all I'm saying. You got to hit the home runs are what makes or breaks everybody. Andy, you know that. Hell, I know that. So I don't care if you go to the boat and you're sitting there playing cards, blackjack. I mean, when you get hot, you got to press it and press it and press it. And all I'm saying is I think you have an opportunity between now and year end in the bean market. I'm not going to put a cap on the upside as price. I'm just going to say between now and year end, I'm going to keep adding to my soybean position. I'm from a spec perspective. And I'm going to see where the hell we end up here at some point during the next 2-3 months, because I think the balance sheet's going to continue to tighten. I think China's going to continue to buy. And I think you're going to have weather headlines in South America just because you got La Nina. So the media is going to run the head. And I'll ask both of you. Andy just said, I wouldn't be short beans with stolen money. That's a key. So who's shorting it? I don't give a shit if the funds are record long. Records are meant to be broke. They love squeezing the shit out of it and staying long. More, you know, they love squeezing it, I think. So it's like, and I could be dead wrong. I'm just saying from my perspective, you have some chances. In the last 3 years, we haven't had any chances to hit home runs.
No.
None. Zero. Nada. So it's like, here at least there's a window. I don't know if it happens or if it doesn't. I'm just going to be looser with it. I don't want to oversteer the position. I don't want to cap the upside. I don't want to trail a stop. I got to give it room to work. And, you know, I think corn, if you got the balance sheet down sub 2.2, which I don't know if happens, Mike. I mean, I think it'll be hard to get the funds massively interested in corn unless you get sub 2.2. I just think most of the hedge fund guys I know and the big players that are going to want to hedge in commodities, they're going to like the story in beans. And I think it'll keep it'll keep pushing a little bit more of that. If they're going to make a play in commodities for inflation or something, I think they push into the bean market because they think there's probably not a lot of sell pressure between now and then. So that's why I said, unless we can get the corn balance sheet sub 2.2, I'm probably going to be I don't have a spec position in corn right now. I blew out of it before the report. And I thought, like Mike, maybe it'd back and fill and maybe it'll kind of tinker around as we get into harvest here. And if the funds want to play around, I think they play around in beans because wheat seems a little elevated to me. Do you agree, Mike? I mean, from a global.
Well, we're you know, you take a look, we finalized the crop insurance values here on Monday. we're 50, depending whether you're a soft red grower, hard red grower, north or south, it's 50 to 65 cents higher than a year ago. And we've got a really nice setup with the weather to get the beans
That's
off
right.
early. The temptation is to plant more wheat. And I think
Right.
that's, yeah, the Northern
Yeah.
Hemisphere. So you take a look at, the July is 553, which is, attractive, and again, I'll go back to the double crop grower. The best scenario he's got today is this July 21 wheat combined with Nov 21 beans. It's the best money he's seen in a while.
That's why
Kevin, I'm gonna go back to your beans. You've got 50% covered with floors. Did I understand?
No, I've got 50% about priced right now. And it's
Okay.
anywhere from, I had priced 30% early before we planted, which we got off at the price, but then I was hitting the panic button. I'm like, holy shit, we're going to get nothing priced during the growing season. And then that storm went through Iowa and Nebraska, and China started buying at the same time. I mean, that was certainly no, I'd rather be lucky than good. That was luck. I mean,
Right.
I thought we were in deep shit. I'm like,
Well, believe me, I understand the same thing, because that was where I was sweating bullets. Maybe 25, 30% covered. Now we're at 50 and looking to protect the more. We're not as far apart as you might think. I mean,
oh no, I think we're in the exact same spot.
Well, what I'm getting at is you sound awfully speculative. I mean, that's what you sound like to a grower. And I want to remind the listeners, you and I both have half our crop covered. Don't
We're the same on that. I'm just saying, I just think, and I'm not re-owning. I've had people call me about re-owning. I'm not doing that. I've made those mistakes. Everybody's like, yeah, I'm going to re-own all my previous sales. Shit. Every time I do that, I end up in worse shape than I was before. I'm like, I just dig a stupid hole. So I don't re-own these initial, my early sales, I'd never re-own. So anymore, I've learned from that little number. So no, this is just truly my remaining 50%. I'm just saying, I'm going to try not to screw it up and do something stupid and over analyze and put a bunch of, because you and I both know nothing pisses us off more than the farmer who doesn't do anything and doesn't even turn on the quote screen and then kicks our ass on marketing for the year. But sometimes I'm like, sometimes that isn't a bad move. Just, I like the setup for the next 3 months. I don't want to get tripped up in listening to some stuff that would freak me out or make me, just pull the trigger. Let's just see what happens here for a little bit is what I'm trying to say. And if guys could maybe take that approach, it might help them. I don't know, as long as you got a floor and you got some protection in, and
you're willing to. I just wanted to clarify for the listener that on half your crop you're protected, and the other half you're gonna. Hey, I want to see how things go, and that goes back to my comments about 21 too. I don't want to go out and hit 21 with a sledgehammer until we see where South America plays out here. If they raise 135 million tons, that's one thing. If they drop to 120, we may get some better opportunities.
Like today, we're up 15, 16, 17 cents in beans, and it's like, you could go out there and buy some cheap puts on the rally, not on the break, on the rally, and give yourself a little more floor. I'm just saying I'm not capping the upside yet. And eventually we run another 50 cents, 75, maybe sell some calls up into the rally. That's all I'm saying. I just think don't just.
I like that a lot. You can buy some 880 no puts real cheap here on this strength. And then, just sit tight and leave the upside open on the back end. We're more aligned, I think, than maybe we sounded earlier. Yeah.
Oh, yeah. And Andy, you're out of rice. You step to the side for a minute.
Yeah. I stepped to the side. I just, I think we're going to see, we added 150,000 acres that kind of out of nowhere, but I think we're in a demand market. I think eventually, but you got the funds along pretty close to their upper end of their limits. And you have harvest right in our face, and you got a carry out that looks on paper to be pretty negative. But at the end of the day, I think that they're grossly underestimating exports, but that's something we'll realize over time because demand markets, the government's always late to that party. And, but I think by the time we get down the road, there'll be a great opportunity to re-own it. I just like to see it get back to at or near the lows of that 1120 to 1140 area and re-own it. But sit on the sidelines here for a minute, just by virtue of the composition of the market and the fact that harvest is upon us.
Andy, if a farmer's taking a 3 to 5 year outlook and he's in the Mid-South, should he be looking at adding a few more wheat acres as we move forward, or excuse me, rice acres as we move forward here?
Probably. There's a lot of hybrid technology going on out there that could make some just extraordinary gains in yields. But as a rule of thumb, yes, I think that the demand base is fairly static. I mean, it's all North American orient, or it's all this hemisphere. Maybe a little bit over to Iraq when we give them free money that they'll buy from us. But other than that, the Asian markets kind of take care of the rest of the world, and between us and Mercosur, we take care of this hemisphere, or this side of the world. But yeah, it's such a small market to begin with, Mike. There's not, it's the pus and the pimple of a Texan's ass, so to speak, in terms of the amount of volume. I mean, hell, we open interest at 10,000 is, at 15,000, that's big open interest. And if you get a 500 contract a day volumes, that's a big day. So it's a real small niche market, yeah. But the margins are good at these levels, and what you can anticipate and book forward. I think there's there certainly is a good value in looking at more rice acres.
Okay,
but don't want that to get too popular.
I got one. I'll end with one. We'll wrap up. Both Andy and Mike have taught me a lot through my own trading experiences. Andy, kind of explained to Mike too, when you just talked there on the rice about a demand-driven market versus a supply side or weather-driven market. And I've been talking a little bit in the report, and I think maybe some people don't understand. I said maybe corn could transition to a demand-driven market, possibly. And I like those because they tend to be, in my opinion, they tend to be longer, give you more opportunities to get in as they kind of stair-step a bit. And and like Mike's saying, maybe we're moving to that again with commodities as a whole as we come out of this corona thing, and we've seen trillions and trillions put in stimulus, and we get this demand-driven type of bull. Boy, that would be a real windfall to partake in for some of the folks. So do we think corn could – and the only reason I say I think corn could transition, if China's going to step in here and be a strong buyer – and continue to be, ethanol maybe rebounds a little bit and maybe feeding residuals. So, maybe you start to get a little more demand story. We have not had that in the last few years. And that's really my play in beans. I think it's demand driven right here. I think we transitioned from weather market to a demand driven bull. It may be just 3 months worth it's going to be. I don't know. South America puts a big crop on. Maybe that's all gone. But I think we could be a demand driven bull market here. Stair step our way higher, and that would explain to them, Andy, like you and Mike have taught me through the years, like the difference kind of.
Well, I think you did a very good job of articulating that. Mike, we've had conversations, and I'm dating us now, but
yes, we are.
Going back 25 years, where every year we were projecting these huge China imports of corn, and it was the inversion of that because they just grew more and more corn, and until now they've been a glutton of supply with no way to get rid of it, and so that's done a 180. And to me, that is a real catalyst for a demand-driven market, and the potential for one. We don't have a monopoly on production on a global basis anymore. Certainly, we have a lot of competition, and we've added so many acres globally that everyone's been afraid to talk about a demand-driven market. Because we can fill that divot real quick, and we don't have another ethanol event to come down the road to drive demand even higher. So we've gotten complacent about it's a supply side market, and big crops and low prices is the only thing we have to look forward to. But there's a little bit of light coming through the clouds right now, and I don't disagree with you, Kevin. We could see that, and I think. Not to the same degree that ethanol was in 2007, but, overall, I think we could see China be somewhat of a catalyst here for a demand-driven market. How do you see it, Mike?
I'd agree, Andy, that it's all about China. I mean, there are good people that talking about, 2, 3, 4 years down the road, maybe their import needs are 50 million tons, So we have to be sensitive of that. My concern with China's still a political football. And I think whichever presidential candidate you support, they both got some concerns with China. I don't want to lose sight that that's a risk, that if the relationship between the two countries gets worse and worse and worse. We have to watch things. China's funny this way. I think with the Phyto cert issue, they can buy Ukraine corn, they can buy U.S. corn. I think it's just a matter of time, not if or when they are cleared for Brazilian imports too. But that's a massive country. The appetite for commodities currently is insatiable. The RMB has rallied to the highest levels we've seen in some time, which makes the purchases that much more attractive. And Kevin, I think that does set you up. And I think there is a potential, like we've seen in beans. If you'd have talked to a farmer August 1st, what are the odds that beans trade $10? Well, I think the three of us would have said, well, they were a lot better than the odds of corn trading $4, and it's kind of evolved that way. But I'm starting to turn my face towards the corn market and say, there could be some potential here, Kevin. And I think there's some good people starting to pencil in a 2 billion or a 2-1 carry out. And that gets a little more interesting. You start to develop, if we plant a lot of wheat acres, okay, what's that mean for corn and beans in the spring? We talked about rice with some interest, cotton guys. I mean, do we get into some sort of interesting acreage battle this winter, particularly if South America has any kind of glitch? We're so reliant on Brazil and the Ukraine. Those are folks that if they have a weather issue, it certainly has an impact on the products that we're raising here. So I do think that we're on the verge, as long as things are okay with Beijing and DC, for what could be a real healthy demand-led kind of scenario here over the next few months.
I think Andy made an interesting point when he said he wasn't going to chase the bean rally. And I agree with that in this sense. I mean, supply side weather driven rallies, you almost have to chase and be a Houdini to exit, because shit, boom, and it drops and it's gone.
Yep.
Andy's always taught me, and a couple other trades, a demand driven rally will stair step, and it'll give you multiple opportunities to get in. Do you agree, Andy? I mean, you'll get chances.
Oh yeah. There's no question about it. Demand-driven markets are not a linear move, and I agree. That's a good point.
Yeah. So hey, that's all I got for everyone. I mean, I sure appreciate everyone being on. Mike, you got anything, closing comments?
Well, I'm glad that the Big Ten's back playing football, and hopefully the Big 12 will do better next week than they did last week. But it was a tough one for Iowa State. I'm a big fan of Iowa State because they've got Matt Campbell as coach, and he's kind of a local boy. But I think the tone from when we last talked, I don't remember the date, Kevin, and you and Andy, it was pretty tough to be upbeat for production agriculture at that time. And a lot of things have changed. I think the three of us are much more optimistic. How we go about managing that will differ between the three of us, because we all think a little bit differently. We think alike at times. I just am in a lot better frame of mind here relative to the opportunities to make money here. I just want to make sure that guys don't stick their head in the hole and they take advantage of some opportunities when they present themselves.
Andy?
Yeah, no, I'd agree with that, Mike. It's certainly the environment. It just feels a lot more upbeat and optimistic. A couple month or 2 months ago, boy, it was a hard conversation to be having, and continually to be the polar bear. But things do have a much more optimistic feel to them now. I'm looking forward to the election. And Kevin, last November 2016. I invited myself to your house for that night, and I'm going to do it again if I'm so invited. So I look forward to being in your basement and watching some of my favorite stars on TV melt down. So anyway.
You're not right. So no, I appreciate it, guys. Yeah, hopefully we get past all this, get together sometime and have a couple drinks. And
I'm looking forward to that. I'm looking forward to that.
No more of these Zoom cocktail meetings, right, guys?
Enough of that. Thanks, Kevin.
All right, thanks, guys.
Kevin, thanks.
All right,
thanks again. Mike, great talking.